Good morning, everybody. Welcome to the Game Plan. Of course, I'm Gareth Soloway, Chief Market Strategist here at Verified Investing. And what we want to do today is what we do every day. We want to take over the world. Little homage to Pinky in the Brain for those of you that know it. But point is, we're here to discuss the trading setups. We're looking at the technical analysis. We're looking at all of these other factors out there that can set us up for good trades on the day. And listen, if you follow the charts, which give you probability, your odds of success as a trader or an investor go up dramatically. What do you think the big institutions do? They're analyzing, they pay people millions of dollars to find these key levels on the charts that they then trade and then ultimately make money hand over fist. So let's start doing it for ourselves. That's what I'm here to teach you and help you with. All right. So first and foremost, some key things to watch. Number one, relations with China starting to deteriorate again. We saw overnight the Chinese government making legal threats against the U.S. for basically saying that no one can buy the Huawei chips, right? So again, there's more of a kind of a pulling tension there between the U.S. and China that's pushing the markets down this morning. We know the markets were overbought going into the last few days. Every day we've seen the technical buy the dippers come in. They've bought this market up. They've kept it from having big down days. The question is, with a gap down today, can the buy the dippers save the day again? Now, there's one factor I want you guys watching today. It is at 1 p.m. Eastern time, there is a bond auction, the 20-year bond auction. The U.S. government is selling 20-year bonds, raising billions and billions of dollars. This is the first big long-dated bond auction since the Moody's downgrade. We need to see what the demand is from the global picture, right? The other countries, are they still willing to buy, or do they demand a higher interest rate to buy our long bonds? All right. So again, that is number one. Number two, we did get earnings today from Target TGT. We'll look at those in just a bit, but Target is falling this morning. And again, we'll go over a couple other factors. All right, let's jump into the charts here. As we get into it, you can see this is the S&P futures. And overall, we are trading down. So yesterday, we closed right here, right? So it looks like we closed actually right up here on the S&P. And then basically in the after hours, we've trended lower. Now, one thing we should watch is there's a potential inverse head and shoulders here, which again could insinuate that we could see buy the dippers at the open. The question is, do we get that buy the dip? Again, we would have to come up here and break this line right here, right around on the futures 59.33. If that happens, we could rally basically back to the flat line on the markets. But again, the question is, can it hold that all day? And what does that bond auction tell us? But again, listen, if we take out this low down here, that's off the table. But right now, this could be, if we curl up into the open, this could be a little inverse head and shoulders signaling buy the dippers will be back at the open. My big question, as always, folks, is does it last? Are there enough buy the dippers to last the entire day? Or does the market late in the day roll over? We haven't seen that very much here this week. But my fear is that everyone's being automatically programmed to assume the markets will always rally back. And then that's where the kind of the rug gets pulled on the investing public. And we see a move to the downside. We continue on the S&P itself. So this is the S&P daily chart. We continue to be into key resistance here. Take a look at this. And again, you can see, again, we're hovering right in the midst of this on the S&P. We'll be opening again a little bit lower today, but we're still right into that level. And remember, what I said yesterday is very key. Are we going to continue to chop sideways, which could be a bull flag, or do we see a bigger rollover, which then negates any chance of that bullish pattern formation on the charts? Looking at the 10-year yield, 10-year yields are up again today. So again, going into this bond auction, the 20-year bond auction at 1 p.m., we are looking at higher yields back above 4.5%, nearing 4.54%. And again, you guys know my target is up here. So I still think that we go up here before we have any meaningful pullback. And again, that's around 4.74% on the 10-year yield. And remember, yields up, markets down. And that's what we're seeing again today, right? Yield, the 10-year yield is up. The stock market is down right now. Yesterday, the yields were up a little bit. Stock market was down a little bit. The day before, the yields were up a lot. The markets opened lower. As yields fell to the downside, the stock market rallied back and closed flat because the yield closed flat. So we're really seeing this inverse relationship continue to play out in the charts. Now, what we are seeing is This chart looks continuing to look very nice on a shortable level. I continue to hold this with members of Smart Money Stocks on the short right off of this level. So we are looking for further downside in something like JP Morgan here. A lot of charts have made these meteoric runs. You can see even Robinhood, a lot of these kind of favorite ones on Reddit where they're coming into these all-time high levels. Actually, on Robinhood, I don't believe this is an all-time high if you go back to 2021 or when it IPO'd. In fact, you can see over here, yeah, in 2021, the IPO popped all the way to 85. But shorter term, is this a double top? Yes, you would expect some sort of pullback on Robinhood over the next, couple weeks or so off of this double top. It could go a little higher. Double top tick technically is around 67, but you're now getting into that level. This stock, again, has rallied from $30 just from April, now back to over 60. That's a 100% move. It's an incredible move, folks. There's no doubt about it. All right, flipping over to Target, TGT. Target reporting okay sales, but their guidance was weak. And sure enough, the stock, after initially popping on those sales numbers, then the guidance has taken it down here. Now we're approaching this $91 level. If we go to the daily chart, you can see I have a line right here where we're currently trading. There's going to be a little support at a $90 even number break, but then really double bottom down here at around 88 is where I'm going to start to really get interested as a day trade. Now, what about a swing trade? What will we look at as a swing trade level? I'm going to show you right now. For me, on a swing basis, my first level of interest, there's a pivot over here, which matches a gap fill right here. And if we drag that line across, it's just below 84. This would be my first level that I would be interested in a swing trade on. So again, first level would be day trading. This one I might consider a swing trade for a short-term bounce. But ultimately, if we do slide into recession, like I think we do either later this year or early 2026, I got to believe that, again, Target probably goes even lower. Now, listen, valuation-wise, Target, yes, they're struggling more than Walmart, but Walmart's valuation is like a tech stock, folks. And I continue to be a big bear on this. You can see, again, here's a couple levels. This was my first level. We hit it. We've pulled back. Now we've rallied back up. If we get through here, this would be an amazing shortable level. Not only would it be about a double top, but you also have a gap fill on Walmart. That's at around 104. And just to put this in perspective, Walmart is trading at basically a 35 forward PE. Now, again, you go to things like NVIDIA, those stocks are trading at 35 PEs, yet somehow a retailer with growth that is probably in the low single digits is trading at that PE ratio. It, again, folks, in my opinion, is way out of this realm. At some point, we will see a big drop in Walmart, probably if we get to a recession. I think the reason why Walmart's held up so well is because you've had people that used to shop at Target, that used to shop at slightly higher end retailers, they've moved down. But people that are still shopping at Walmart haven't necessarily moved down below Walmart yet. So Walmart's capturing more market share, but I don't think that lasts if we slide into recession, as more and more people will slide below even Walmart, unfortunately. All right, back to the charts we go. A couple other key ones. VF Corp is down on earnings. This stock was already relatively close to the lows. Like if you zoom out, you can see it was all the way up around $29, $30. It cratered. It has come back here a little bit, but now on earnings is trading down. Now on earnings here, there is a level. There's a little former gap fill around 1185, and then this little pivot around 1175. This would be an aggressive day trading level right here at 1185 to 1175. For me, I'm going to look for a little bit of a lower move. Below 11, there's another gap fill, and you start to get into this low pivot here. And then just below that, obviously, we have a low on VF Corp around $9.50. Now, this stock is not a high flyer anymore. If we go to the monthly chart, you can see this used to be a $100 stock back in 2020. And even in 2021, it was $90, but it has come down dramatically. Look at this chart. Longer term, you're going back to levels that basically put you back at the Great Recession lows. It's actually pretty remarkable to see something like this. Now, speaking of which, Wolf yesterday, there was a article by the Wall Street Journal that basically said the company within weeks may be filing for bankruptcy. So again, this is a stock that I've talked to you guys about quite often, and I've played it with my members multiple times. What's interesting, we sold it the last time. I think we sold it around the $4 or $5 range. We made some good money on it. And then after their earnings, there were a couple downgrades by JP Morgan and a few other big banks that basically said it looks like they could be going out of business. And the fact that they didn't get the CHIPS money, that's the big kicker, folks. And is they were supposed to get $750 million from the CHIPS Act. But basically Trump has canceled that out and not given them the money. And that basically, put the nail in the coffin, essentially. And what's interesting here is this is a company that is out of North Carolina, all manufacturing done in the U.S. So it is kind of surprising. I'm surprised that the president is allowing that to, if there's anyone you're going to give money to, give it to, U.S. job-centric company that does chips, right? But nonetheless, it is what it is. And they are running out of money fast. And again, am I interested in Wolf down here? The answer is probably not. Doesn't mean I won't day trade it. There's always a possibility of a day trade. But if they're going to file for bankruptcy, the stock could go a lot lower. And again, I think that has to be taken into account. So again, glad we stayed away as members from this over the last couple months or so as it's cratered back down. I think our last move up here unloaded it into that, and then it has come back in since, and obviously trading down in this range. So I'll keep you updated. If I change my mind and think there's a long there, I'll let you guys know. But as of now, bankruptcy is pretty serious stuff. Obviously, it can always bounce during a bankruptcy proceeding, but it just becomes a lot harder of a trading opportunity. Baidu is up on earnings here this morning, although it is coming in a little bit here. So it popped as high as almost 93, coming back in a little bit, but still net positive after they reported earnings early this morning. And again, the stock looks like it's up slightly on the day. Flipping over to Bitcoin, Bitcoin keeps trying. It keeps trying. Oh my goodness, it keeps trying. So you have the bull flag move above here. So this was a bull flag. You closed above, didn't confirm. This looks like it did confirm yesterday, so that's a good sign. Overnight, we got as high as over 108,000, less than $1,000 basically away from the all-time high here. But then it has stalled out again. My guess is because the stock market is down on the day, right? So we know that the way this has acted lately has been very much like the stock market in terms of risk on, risk off. Now, listen, just the fact that we remain above this kind of bull flag zone here around 105,000, I still favor at least a touch of the all-time highs. But to me, when I see how hard it is for Bitcoin to just push up a little bit from this breakout to this level here, which is your all-time high, that is a warning sign to me. That tells me that while it may still go there, it is now running out of steam. And I know there's been bills in the government that have gone in the favor of crypto or are going in that way, but it doesn't change the price action. Remember, I don't care about news really. I focus on what the charts are telling me because that's the real probability. The news is jaded, right? We know that this or that, it creates hype or FOMO or fear. But ultimately, the charts are our best friend at decisively telling us the direction of where things are going. So Bitcoin, again, stalling a little bit today. Now, if the stock market can recover, maybe Bitcoin does still have that push up to 109 and change. I still favor that because you have to trust the charts. As long as we stay above a daily close of 105, then I favor that upside to 109. I will keep you guys posted on that. Gold today continues to grind higher. It's not up a lot today, but yesterday was a tremendous move. The bond auction today absolutely could be a trigger for either upside or downside on gold, as that will show whether or not other investors are willing to buy the long bonds here from the United States, the 20-year auction. Okay, next up, if we take a look at silver. Now, silver, I told you a few days ago, I went long on silver. I liked the bullish consolidation. It is now moving up. It's trying to confirm the breakout here. Again, it is up again today. It closed above this downsloping trend line here, which again is the bull flag consolidation pattern trend line. So that is good. I continue to like silver for a move at least up to about 34.50. But in reality, this is such a good longer-term bullish pattern that if it gets its mojo, we could see silver going easily north of 35, maybe even to 37 or 38. So again, silver continues to look very good here on the charts. It's only up a little bit today, but yesterday's day broke above the parallel bull flag channel. All right, next up, let's take a look. We can take a look at palladium. You guys know I've championed palladium with you guys for quite some time, talking about how discounted it was on a longer term basis to the price of gold. Love that breakout yesterday and the day before, and then today moving up a little bit more. First test of the strength is going to be really right here. In fact, look at today's high. So this high pivot, right? This is your highest high on either side going back to here, which is basically at the same level, give or take. But right here around 1030 on this palladium chart is the level that I'm watching. If we can get through this, we actually have a shot of going up to about $1,250, this former pivot on palladium. And I don't want to skip out on platinum, because platinum, I know a lot of you guys are big fans, but look at this little inverse head and shoulders breakout here. Boom, to the upside. It's actually already reached the target of the inverse head and shoulders. And look at where it's stalling here. You have a little bit of resistance right here, and then really a little bit more upside. I think there's a little more upside here before a big test of resistance to about 1095 on platinum. So nice move there. Speaking of which, what the heck? Let's get into copper here today. Let's see what copper's doing. Copper, again, continues to chop sideways. What type of pattern is this? To me, this looks more like a bearish pattern. So again, I think ultimately copper rolls over, breaks down, and eventually comes into here. And that would not be a good signal for the U.S. economy or the global economy if copper starts heading lower. Next up, let's take a look at oil today. Oil did have a pop in the overnight. Now, again, the big news here, folks, is that basically news broke that Israel might be attacking Iran's nuclear facilities, and that's why you saw that overnight pop on oil. It has been mitigated. And again, remember, folks, is that even things like that, they're not going to have a lasting impact on oil because the U.S. produces way too much oil for it to have a lasting impact. We're not back 30, 40 years where the U.S. wasn't producing as much as we need. We now produce more than we need, and therefore can fill gaps on, like, Iranian oil and stuff like that. Now, again, remember also OPEC Plus increased production recently. So all of these things, a weaker global economy, those are all factors that to me tell me that if we can get to 65 to 66 on the charts on oil, then we start to get into a level where I would actually short it. But overall, again, just a lot of sideways chop here on the price of oil. Natural gas had a monster rally yesterday, up about 8 to 9%. Today, it's basically pausing. Again, after 6 down days, which we would call a time count. Again, not surprising to see the bounce. There's no trade. This is resistance. This is support. It's just trading in the middle here. I mean, it was a great move yesterday. But for me, aside from the time count, there wasn't a reason to go on the long side in nat gas, and I still remain on the sidelines for now. Flipping back to the ES, take a look at the S&P futures. We are starting to head lower again, heading back towards the lows of the early morning around 6 o'clock in the morning. We traded down here. So right now it looks like we will have a lower open in about 12 minutes of the U.S. stock market. Now, is there still an inverse head and shoulders here? You could still make a case for it, but again, the inverse head and shoulders, any chance of it would be negated if you take this low out. So we have to start to curl up here. And obviously at the open, we'll watch to see, do the buy the dippers help that to create that right shoulder? Just remember, again, even if we have a inverse head and shoulder play out, I still think the markets are in dire straits in terms of how overbought short-term we are. NASDAQ up 30% off of its lows, the S&P up 22%. We're due for a smackdown day. We haven't had a down even 1% day in the market in quite some time. And that's following some pretty nasty stuff with China starting to boil up again with the U.S., Israel, Iran stuff, economic inflation, the bond auction. All of these are headwinds that, at least as an investor, I think the retail investor has been so programmed in to buy the dips that it makes me very nervous that all those players will eventually get the rug pulled out from under them. Institutions have a weird way of doing this stuff, folks. All right. On that note, I'm going to bid you farewell for today. Watch the bond auction today, folks. 1 p.m. Eastern time could give us some afternoon trading volatility. Take care.